There are going to be 4 short examples, but I wanted to give you this verbiage from our previous notes on insurance in case you need to refer to it during the final. So I'm going to go through and highlight some things. You guys can highlight with me. You can be doing this on a PDF in Cami. You can be doing this digitally on the doc that's attached to the bin, or you can be writing notes in your notebook. So auto insurance, something that already is affecting many of you because you guys drive. Why is having auto insurance so important? Everyone, even responsible drivers, run the risk of insuring themselves, hurting other people, and damaging property. So just so you know, when you step in that car, drivers are liable. You're responsible for damages caused. To pay for damages caused with your automobiles. You could also be sued for being negligent or at fault for the damages caused, especially if you cause the accident. So drivers have to purchase automobile insurance. Now, we pay a fee or a premium to the insurance company for this insurance policy, and then the company agrees to cover the accident-related costs. If you're in an accident, a driver makes a claim, the request for payment, and what, I'm going to go ahead and grab a different color here. Liability insurance is the type of insurance that covers that person from damages. Most states set a minimum liability insurance requirement. And so look at this down here. Liability is what you have to have in the state of California. But liability insurance covers 2 aspects. Liability insurance covers bodily injury. If the driver is at fault, it covers medical expenses if you injure another person in the accident. And property damage says that the insurance covers for damage that the driver causes to another person's property. So when you guys buy liability insurance, because you're required to, that's the cheapest one, you get both of these coverages. It covers other people's medical bills if they're hurt, and it covers property damage. So if your final exam says, what is the minimum amount of coverage you have to have? You guys are going to say that it's liability. You have to have a liability insurance policy. Now, what are the other types of coverage? An important one is uninsured motorist. If someone hits you and they don't have insurance, you're screwed, right? So if you have uninsured motorist coverage, it will cover you if that person did not have insurance. Unfortunately, a lot of people drive without insurance, even though they're supposed to. So this would cover you for that. Personal injury protection, it pays for physical injury that the driver sustains. So this is you, no matter whose fault it is, the insurance covers you. And the most expensive insurance is comprehensive. This is if you buy a car with a car loan. If you buy a car with a car loan, they make you get comprehensive coverage. It covers you, it covers the car, it covers the other people, it covers everything in full. But this is the most expensive car insurance. And then collision insurance is part of that comprehensive insurance. Car rental is so that you can get a car rental while your car is being worked on in the shop. And emergency roadside service is like AAA. If your car breaks down or your battery dies or you run out of gas, they come help you. I wanted you to have all these definitions handy so that you guys have these for your test in case there's like vocabulary questions on it. Are there any questions on any type of insurances here? Please type in the chat right now. What is the minimum coverage you have to have? Please type one word in the chat. What kind of insurance minimally do you have to have for the state of California? I want everyone to type it in the chat right now. And then one of you unmute and say it.
Liability.
Boom. You guys all have to have liability insurance. Okay, let's go do a couple of examples here. And I do need some help with some calculators. Like I said, these are going to be 4 fast examples, and I'm going to let you guys go as soon as these 4 are done. Rob's annual premium is $16.72. If he pays quarterly, so again, off to the side, we're like, ding, 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 quarterly. Think of 4 quarters in a dollar, and there are also 4 quarters in a year. Quarterly means 4 times per year. If the question on the final says quarterly, we're going to take that annual premium and we're going to divide it by 4. If he pays quarterly and there's a $1 per payment surcharge, what is the quarterly payment? So I need a calculator here. Can someone do 1672 divided by 4 and unmute and tell us what that is? Thank you. Someone else confirm that's what they got?
Yeah, it's 418.
Thank you. And then plus $1 for the surcharge fee. My quarterly payment is going to be $419 every 3 months or per quarter. So take a minute to say like, okay, on the final, am I going to remember to divide that by 4? Am I going to remember to add that surcharge fee? Sometimes the surcharge fee is like $1. Sometimes it's $2.50. It varies from company to company. Okay, example 2, Juan has $25,000 worth of damage liability insurance. He caused an accident that damaged $2,000 fire hydrant and $5,600 worth of damage to another car. How much on this name? Sorry, should have been changed. How much damage did Juan have to pay? Must he pay? So remember that all of the damage gets added together. And so this works out to $7,600. And as long as this is completely under your limit of coverage, since $7,600 is less than your coverage, then the insurance company will pay it. But remember that insurance pays everything except the deductible. And so in this question, we would say that insurance covers everything except the deductible, but it didn't tell us in this example how much Juan's deductible was. So let's go to the next section and remind ourselves, like, what are deductibles anyways? Juan would pay the deductible and the insurance would pay the rest because it is under the $25,000. Okay, so a deductible. Collision and comprehensive insurances are sold on a deductible basis. When you purchase the policy, you choose a deductible amount. So for example, Ms. Sanchez has a $500 deductible. I have a $500 deductible. There are even $250 deductibles. I could even have less. And that's how much money I have to pay, and the insurance company pays the rest. So why wouldn't we all just go for really low deductibles? I'd rather pay a really low amount because the deductible is the amount that I, the driver, have to pay. So why wouldn't I make that a really low amount for all of us? Well, the higher the deductible, the lower the premium. We're always trying to save money on our insurance. So once the owner pays the deductible amount, the insurance pays the rest. But these insurance policies are sold on a deductible basis. So collision insurance only covers the damage to the policyholder's car or another driver's vehicle. That's collision. And if a driver has a $500 deductible and the repairs to his car were $2,200, the driver would pay the first $500 and the company pays the balance. This up here, embedded in this, is a little example for you to refer to. of how to calculate that remaining difference. We're now going to go do example 3 the same way. Sua has collision insurance with a $1,000 deductible. Sua backs his car into a lamppost and causes $4,300 worth of damage to the car. How much does his insurance company pay, and how much does Sua have to pay? Well, Sua pays the $1,000 deductible. He caused the damage. He pays the deductible. And then insurance pays the difference as long as it's within his coverage limits. So what's the difference? I just take that $4,300 in damage, subtract off the deductible, and insurance pays the $3,300. So this is one of the most shocking things for students that are new drivers. They're like, what do you mean I have to pay something? Insurance pays part of it, but you guys pay the deductible. Oh. Any questions on deductibles? How much you would have to pay? You should find out from your parents, what is your deductible? So you know how much you're responsible for if there's an accident. We're getting to the last example here, the last section. What if there's bodily injury? I don't know if you guys remember Miss Sanchez telling you a story about how I got into an accident once in my little tiny Prius. It hit a big Chevy Silverado. I rear-ended it, and it was my fault. I was going about, 30 miles per hour on the freeway. He slammed his brakes on. I didn't catch it in time. I slammed into him. My little tiny Prius folded under his car. It was totaled, and his Chevy Silverado had some damage, but not too bad. I was so apologetic at the scene of the accident, but the guy kept saying, don't worry, I'm fine, whatever. When he got home, guess what? He changed his mind. He wasn't fine. He decided he had bodily injury. Bodily injury is the worst kind of accident, when someone gets hurt and not just something, and it causes more points on your record. And what happens when you get points on your record, you guys? If you have a lot of accidents, your insurance goes up. Sometimes your insurance could even get canceled if you have too many accidents in a short period of time. So bodily injury is something we're always trying to avoid. Obviously, we're trying to avoid all accidents, but we never want to hurt a person. So the first number is given to us. It's the maximum amount per accident. The maximum amount per accident that they will pay to any one person. So go look at these numbers with slashes, like 100,000. When it says 100, 325, the 100 stands for the amount per person, any one person. The second number stands for the maximum amount that they will pay to all the people in the claim. So that second number, 300, it means 300,000 for everybody. And then what the heck is the little 25,000 if they have a third number behind the slash? That 25, which stands for 25,000, is for property damage. So the yellow and the green, that's for people. That's for bodily injury. And that blue example, the 25,000, is for property. So now let's look at an example. Robert was in an auto accident caused by his negligence. That means it's his fault. He has 100, 350 insurance coverage. So what does that mean again? It means that his insurance pays for 100,000 max for any one person. And that's for their bodily injury. Or their medical expenses at the hospital for what happened. So that 100,000 stands for that. 100 is what it shows in the slashes. The next one, the 300, stands the max for all parties that happen to be in the accident related to bodily injury. or medical expenses. And finally, the 25,000. The 25 at the end. Oh, just kidding. The 50,000 here at the end stands for property damage insurance. That covers any things you hit or you drive over into somebody's lawn and hit their house, etc. So the 3 people injured in the accident sued. One person was awarded $140,000 in the lawsuit. So person 1 sued and was awarded $140,000. Person 2 was awarded $75,000. And person 3 was also awarded $75,000. How much does the insurance company pay? And by the way, in this scenario, the driver was uninjured. Just the 3 people in the other car were injured. So what will the insurance pay? The insurance will pay $100,000 per person. So of this amount, they're only going to pay $100,000, leaving $40,000, for somebody else to pay. Over here, they will pay the full $75,000 and the full $75,000 because it's under the $100,000. And remember that all 3 of these combined have to be under the middle number to make sure that the insurance will still pay all those numbers. So we add it up, and that gives us $250,000, which is less than the $300,000 max. So insurance does cover it. So how much does insurance pay? Insurance pays $250,000 because it's paying $100,000 for person 1, $75,000 for person 2, and $75,000 for person 3. So that means, what's this guy's name in this problem? Robert. That means that Robert has to come up with $40,000 because it's over his insurance maximum. So that's way more than his deductible. And it sometimes happens. You want to make sure you are fully insured so that you don't have one of these scenarios where you don't have enough money to cover you.